just about everybody in Australia knows that when you sell your house, you don't pay tax on it, or at least that's the theory. So a capital gain or loss you make is disregarded in relation to a dwelling, and we need to understand what a dwelling is, and we'll talk about that in a moment, or your ownership interest in a dwelling. So it can be a partial interest in the dwelling, and we'll also talk about what the ownership interest means, because it has a different meaning to what perhaps you and I, or at least an extended meaning to what you and I might think that means. And if you are an individual. So one of the big things about the main residence is that if you want to get the main residence exemption, you have to be a human being. However, there is one exception to that, and that's special disability trusts. But basically, you have to be a human being in order to get the exemption. And now remember that this is the general provision. So the dwelling was your main residence throughout your ownership period. Okay. Now you'll probably be thinking, oh, wait a minute, there's all sorts of other provisions, and yes, we'll get to those, but this is the basic condition. So it's your main residence, whatever that means, throughout your ownership period. And then lastly, the interest didn't pass to you as a beneficiary in, and you didn't acquire it as the trustee of a deceased estate. So there we have it. That is the basic condition that starts off the capital gains law in relation to this. Now, if it was just that, well, then we could shut down the webinar and go and have a nice lunch. But unfortunately, it ain't like that at all. There is a lot more to it.